Hello, everyone. In this lesson, I will cover digital banking and payments. I'll begin with an explanation of digital banking and payment technology and describe how digital banking and payment technology have evolved. Next, we will look at the different types of payment methods and technologies, and then explain security and privacy associated with digital banking and payments. We will also identify the regulatory framework of payment technology and cross-border payments, and explore the future of digital banking and payments. So what is digital banking? Digital banking is the use of a digital platform for various traditional banking activities, such as money deposits, withdrawals, transfers, and account management. Therefore, digital banking will include online banking, mobile banking, and ATMs, as all these use digital platforms to deliver traditional banking services. As indicated previously, mobile banking is a type of digital banking, or we can refer to it as a subset of digital banking. And we know mobile banking as banking services provided through mobile apps on smartphones and tablets. They offer convenience, real-time access, wide range of functionalities, and makes banking more accessible to previously underbanked populations and underserved populations. Let's now discuss how digital banking has evolved. Digital banking began with the advent of ATMs and online banking. And then through innovation, we had the introduction of mobile banking, which enabled users to manage their financing using the smartphone and the various apps on the smartphone. And the digital banking space has evolved with the expansion of the scope of services, such as the advent of real-time payments, digital wallets, and personalized financial advice. Let's now look at the key features of digital banking. The first feature we will look at is accessibility. Digital banking, such as mobile banking, enables customers to access banking services anytime and anywhere. Next, enhanced security. Another key feature of digital banking is the use of advanced encryption techniques such as biometric verification and multi-factor authentication to protect customers' financial information. Now, the SSL/TLS is a general security feature which is applicable in digital banking, as it is the abbreviation for Secure Socket Layer, and the TLS is Transport Layer Security. The SSL/TLS secures an internet connection by encrypting data sent between a website and a browser or between two servers. It therefore prevents hackers from seeing or stealing personal or financial data that's transferred online. Again, let me emphasize that this is a general security feature, which is also applicable in digital banking. Continuing our discussion of the key features of digital banking, other key features of digital banking are cost efficiency. Digital banking reduces the operational costs for banks and financial institutions. Next, personalized services. Digital banking enables the leveraging of data analytics to provide personal services and recommendations based on customers' transaction history and financial behavior. So those behaviors and his transaction history become data that can be analyzed and used to provide personalized services and recommendations to customers. Next, seamless integration. Digital banking allows for the integration with other financial services. And therefore, we now have a one-stop solution for customers' financial needs. Let us now turn our attention to digital payments and explain digital payments and payment technology. Digital payments are any payment transactions made through digital or electronic modes without the use of physical cash or checks. Therefore, examples of digital payments will include credit or debit cards, mobile wallets, online banking, and cryptocurrencies. As all these payment examples do not use physical cash or checks. Let us now turn our attention to payment technology and explain what payment technology is. Payment technology are all the technology, tools, and systems that are used for electronic transactions, typically between buyers and sellers. Therefore, payment technology examples will include mobile payments, online banking, digital payment processors, point of sales, that's POS, contactless payments, and electronic funds transfers, or EFT. So how has payment technology evolved? Well, starting with cash and traditional methods, where we have physical currency, checks, and bank transfers, payment technology evolved to credit and debit cards, which represented a significant point in the evolution of payment technology. And that offered a cashless and secure method of payment. And then further advancements were the advent of contactless payments and NFC, which is near-field communication being used as a technology to facilitate payment. So for example, you have the cell phone, and then you move the cell phone closer to a payment point, and you're able to make a payment. Let's now discuss a key evolution in payment technology, which is the digital wallet. A digital wallet is an example of payment technology, as it is a software-based system that securely stores users' payment information, like the credit or debit card numbers or banking account information, or even cryptocurrencies. And it also stores the passwords for numerous payment methods. Now, this enables the digital wallet to make electronic transactions quickly and easily. So users are able to make electronic transactions quickly and easily using the digital wallet, either online or in person, using their smartphone or other devices. Let's note that a mobile wallet is a digital wallet used on a mobile device. So popular examples of digital wallets are PayPal, Venmo, Cash App, Apple Pay, Google Wallet, Samsung Wallet, Alipay, and Walmart Pay. So what are the benefits of digital wallets? There are many benefits. Some of the benefits are digital wallets add more security for financial and personal information. With the use of a digital wallet, We avoid carrying physical wallets and cards. And then, of course, digital wallets improves access to financial services. On the flip side, there are some disadvantages associated with digital wallets. First, it may not be accepted everywhere. The digital wallet may not work if Bluetooth or Wi-Fi is unavailable. And a digital wallet is vulnerable to identity theft or fraud. Other payment methods and technologies include peer-to-peer payments. So under peer-to-peer payments, we have services like Zelle, Venmo, PayPal, and Cash App, allowing direct transfers between individuals. I can send a payment or money to another individual using any of these services. And this is pretty much under the scope of peer-to-peer payments. We also have online banking, which we are all familiar with. They allow for direct transfers between bank accounts using online banking platforms or payment gateways. We also do have blockchain and cryptocurrency payments, where, for example, Bitcoin and other digital currency payments can be made. And these types of payments provide for decentralized and secure payment options. Other payment methods and technologies include contactless payments, which utilize NFC technology for swift and touch-free transactions. Now, NFC stands for Near Field Communication. This is a short-range wireless technology that allows two devices to communicate when they are very close to each other. Some of the common uses of NFC are in contactless payments, such as Apple Pay and Google Pay. And a key feature of NFC is that it doesn't need Wi-Fi or cellular data. And it's often used by tapping your phone on something. So when we use these contactless payments utilizing NFC, we don't need Wi-Fi or cellular data to complete the payment. We pretty much just tap the phone on something, a payment point, and we are able to make the payment. Another payment method and technology, or another example of payment methods and technologies, is the QR code payments, which is the quick response code payments. Now, this is another example of payment methods that allows for consumers or customers to do contactless payments by first scanning a QR code. The payment is completed electronically using a linked bank account, electronic wallet, or credit card. So you first scan the code, and then you can complete payment using your linked bank account, electronic wallet, or credit card. Now, one key benefit of QR code payments is that it's efficient and saves time. Let's now look at the benefits of digital payments. We've pretty much highlighted some of these benefits, but to formally discuss these benefits, the first benefit we're going to look at is convenience. Digital payments are convenient. It's quick and easy to complete. Digital payments also have the benefit of providing greater security because of the advanced encryption and authentication methods, which helps to protect against fraud. Digital payments also have an advantage or benefit of facilitating effective record keeping because you have an automatic record of transactions. Digital payments have a global reach. It enables transactions across different countries and currencies. And digital payments represent a significant innovation in the sense that new technologies and platforms are used, offering better and more efficient services. Let's now discuss security and privacy, which are important requirements in digital payments and with payment technologies. Security and privacy are obviously important for digital payments and payment technologies. Key payment security and privacy features are as follows. We have encryption, which is a key feature. Now, encryption protects sensitive information by converting it into a coded format. And once it's converted into this coded format, not easily readable, we can't understand it, we are protecting sensitive information. Another key feature is the two-factor authentication, 2FA. Now, two-factor authentication adds an additional layer of security by requiring a second form of verification. Next, biometric authentication. So with biometric authentication, we would use, for example, fingerprints of the individual or facial recognition or voice identification to verify identity. Again, to provide security and privacy, or to enhance security and privacy of customers within digital payments and within the scope of using payment technologies. Another feature we'll look at is tokenization, where sensitive data is replaced with unique identification symbols, which are tokens. And this ensures the security of the sensitive data. Let's now discuss key challenges and risks associated with digital payments and payment technologies, and indeed digital banking. The first key risk is cybersecurity threats. And you will note when you look at the annual reports of various fintechs within the digital banking, payment technologies, and digital payment space. When you look at their discussion of the risks they are exposed to, very often cybersecurity will be at the top, if not always. Cybersecurity threats are a key threat because they compromise sensitive financial information and have adverse consequences for fintechs in this space. Simply because with such compromisation of sensitive financial information, it's striking at the heart of the operations of the fintech. And it could significantly impact revenues and operating performance. Next is accessibility issues. Segments of the population may lack access to digital banking and payment services. Obviously, digital banking services can be accessed, and as well as payment technology and digital payment services will need to be accessed when one has the, for example, the tools such as smartphones and what have you to be able to access such services. So that could lead to accessibility issues. Next is regulatory compliance. Now, we've emphasized previously that there are complex regulatory environments and regulatory frameworks that vary by country to country. And when you have digital payments across borders from country to country, companies providing such services will need to navigate such complex regulatory environments that are varying from country to country. And last but not the least, There could be system outages, software bugs, and technical failures. All these technical glitches could adversely impact the revenues of companies within the fintech space that are into digital payments and digital banking. Key regulatory requirements governing digital payments and payment technologies include KYC, know your customer. So this is an important requirement. KYC requires that fintechs verify the identity of their clients to prevent fraud and money laundering. And next, key regulatory requirements flowing from KYC is anti-money laundering requirements. And this requires that fintechs in the digital payments, digital banking, and payment technology space must have systems and procedures in place to detect and report suspicious activities in order to ensure that financial systems are not used for criminal, illicit purposes, such as money laundering and terrorist financing. Let's now discuss some key regulations within the digital payments, payment technology, and digital banking space. Starting off with PSD2. So PSD2 stands for Payment Services Directive 2. Now, this is a European regulation that is designed to make payments more secure, boost innovation, and improve consumers' protection across the EU. So, for example, PSD2 will require banks and payment providers to verify your identity using at least two of the following: something you know, like a password or PIN; something you have, like your phone or card. So they could send a code to your card, to your phone, and you need to provide that code. And we're all familiar with that. And then something you are, biometrics like fingerprint or your facial recognition will be under the category of something you are. So at least two of the following must be used to verify your identity. Next is General Data Protection Regulation. This is a law passed by the European Union that governs how personal data of individuals in the EU is collected, used, stored, and shared. Now, this regulation came into effect on May 25th, 2018. Now, these two regulations are European regulations. So one may wonder if a provider, a payments provider based off in North America, for example, may not need to comply with these regulations. No, you need to comply. If a payment is made by a citizen of an European country using your service, you're subject to this regulation, all right? And because of the interconnectivity of the world and of payments and of financial services, one operating or a business or a fintech operating in the digital payment space or digital banking will very often be subject to these regulations, though the regulation is not domestic within the country where the fintech is registered in. Next, let's look at de-identification. Now, this is a regulatory requirement to protect privacy, and it is the process of removing or obscuring personal identifiers from data so that individuals cannot be readily identified. It's used to protect privacy while still allowing useful analysis of the data. And let's also look at payment card industry security standards. Now, these are standards created by the credit card companies, American Express, Discover, JCB International, MasterCard, and Visa. And the intent of these standards are to protect cardholder data. Continuing our discussion of the payment card industry security standards, let's note that these standards apply to businesses that handle, process, or store payment card information, and fines for non-compliance of up to $500,000 may be imposed for a security breach. Note that it's per security breach. Moving on, let's now look at controlled environments, which is another regulatory requirement. Now, in the context of digital payments, controlled environments or controlled environments refer to regulated or restricted settings where digital payment systems are developed, tested, or operated under specific oversight. And such oversight may be by either a government agency, the central bank of a country, or a group of central banks, or regulatory bodies. These environments are used to ensure safety, compliance, and interoperability before full-scale rollout across countries. So it's almost like one is testing the effectiveness, efficiency of a system prior to rolling it out for the general public to use. An example of controlled environments in digital payments is the use of regulatory sandboxes. These are testing environments where fintech companies can try out new digital payment products or services under a regulator's supervision. And the purpose of this, as highlighted earlier, is to promote innovation while managing risk. The last regulation we're going to look at is the Personal Information Protection and Electronic Documents Act. This is a Canadian federal law which regulates the collection, use, and disclosure of personal information by private sector organizations. And there are stiff penalties for non-compliance. Non-compliance can lead to administrative, civil, and criminal penalties. So what is the future of digital banking and payments? We'll start off our discussion of the future of digital banking and payments with a look at AI and machine learning, not surprisingly. Now, AI and machine learning are being integrated increasingly into digital banking to enhance customer service, to help detect fraudulent activities, because AI and machine learning facilitate the analysis of large data sets, and it also allows for the detection of any fraudulent activities. And of course, AI and machine learning, when integrated into digital banking, can help provide personalized financial advice. Next is blockchain technology. Blockchain technology has revolutionized digital payments by providing a decentralized and tamper-proof ledger. Blockchain is a revolutionary innovation, and we will delve more into blockchain technology in a lesson on blockchains, all right? But the key characteristic of blockchain technology is that it is a decentralized ledger, and it's generally and typically a tamper-proof ledger. And that increases security and provides decentralization and eliminates, in many cases, the use of intermediaries. Next, we look at open banking initiatives, which we discussed earlier, which requires banks to share customer data with third-party providers, of course, with the consent of the customer. Now, open banking initiatives would be fostering innovation and competition. And I indicated earlier that the open banking initiative is where the world is moving towards as far as regulation of the financial services sector and as far as customer data being portable. We are moving towards that. And it will require banks to share customer data with third-party providers. And customer data will be portable. Your financial data will be portable. And it will require the use of APIs to facilitate such sharing. And with all these initiatives around open banking being passed, it's going to foster innovation and competition within the banking space and within the fintech space. Continuing our discussion of the future of digital banking and payments, we are moving towards the Internet of Things, IoT, where financial services will be integrated with everyday devices for seamless transactions. So everyday devices like wearables, all right, could now be integrated with financial services, and we can access these financial services with the various wearables, for example. And the last mention we're going to discuss regarding the future of digital banking and payments is biometric authentication. We'll see increasing innovation and use of biometric authentication. So use of biometric methods such as fingerprint scanning, facial recognition, and voice recognition would be expected to increase, providing enhanced security within the digital banking and payments space. So this brings us to the end of the digital banking and payments lesson. I hope you have enjoyed this lesson, and I look forward to delving into other areas of fintech with you.